Most of the founders I've had as guests on First Principles have also been CEOs. And one of the questions I've asked almost all of them is if they've thought about when to make way for someone else as CEO. If leadership is a ladder, we often make the mistake of thinking that the CEO title sits at the very apex. Instead, leadership is often a journey. And the best founders know that to create organizations that outlast them, the CEO title is but one milestone in their own journey. The road doesn't end there. Varun Dua, my guest today, is the founder of Acko, a digital first insurer most recently valued at over $1.4 billion. He was also Acko's CEO before himself hiring a seasoned insurance industry leader to take over that role. That's not the only thing different about Varun. He freely admits that as a graduate, he was super lazy and had no plan for his life. Absolutely no interest in being an entrepreneur. In fact, his dream at one point was to get hired by eBay or Cleartrip. Thankfully for him, neither of those companies hired him. So he ended up starting one company, which morphed into another, which morphed into Acko. Along the way, he became super driven from super lazy. Welcome to episode 22 of First Principles. I'm Rohin Dharmakumar, your host. In today's episode, Varun reflects on the choices he made in his career and life and talks about how he's preparing for the ones that still lie ahead. We talk about the importance of truly owning customer relationships, how incentives drive behavior, whether for employees, partners, or customers. Why asking people what they would do differently with their lives is often a revealing one. How efforts and results can have a snowball effect on not just our careers, but entire outlook towards life. And why the job of a founder is to connect the dots and ring the giant invisible bell as necessary. I hope you enjoy the conversation as much as I did. Varun, you're the 22nd guest to appear on First Principles. All 22 of them have been co founders, most of them have been CEOs. You're the co founder of Acko, but you're not the CEO.
Sure.
When and how did that transition happen?
Interesting start. Firstly, thank you for having me over. But just to put a timeline to it, the company is now about 6 years old. I think we got Sanjeev, who's the CEO, on board about 18, 20 months ago. The company was expanding. Sanjeev has been a thorough insurance professional. He's worked with ICICI. He was the CEO of Bharti AXA. And as the company expanded and we looked at the different things that we were doing, I knew where my strengths were. My strengths were really about taking the product forward, 0 to 1 pieces forward, setting up newer businesses within the company. As some of the P&Ls were maturing, I think that it needed a lot more focus to be able to do some of these things. We are also a regulated business. So it involves a lot of interfacing with the regulator, fairly constant, either sometimes proactively or sometimes they keep interfacing with you. And I didn't think that I could do justice to all of these things, being the regulatory face, being also somebody who's running the P&L day in and day out, starting 0 to 1 businesses, mentoring the teams, actually making any meaningful difference to their careers because you're just too stretched out trying to manage, managing investors. So I thought it was the right time.
This is a very important thing that you bring up, which is when founders start up, they are doing virtually anything and everything.
Yes.
And then the businesses continue to grow and they continue to do more and more stuff.
Yes.
And I think the nature of a founder is that whatever is thrown at you, you will continue to do it. And you will never say, I can't do more, I can't do this. And I think one of the interesting transitions for many people and for many founders at a certain stage is when they say, look, I'm not doing justice to all of these things that I'm doing. And I want
Yes.
to make a choice about what I'm good at and do more of that. And that's
That's
from your
essentially the
answer.
choice. That's essentially the choice. I thought I knew Sanjeev for a very long time. I thought he was one of those insurance professionals who understood the business very deeply and could also traverse that journey of this new world. Right? Somehow these two worlds have not come together, and most of the banking or the insurance thoroughbred professionals who understand balance sheets, risk businesses, have really been the, let me call them, financial services professionals in Bombay who deeply understand the business, but probably don't understand technology, don't understand product, consumer interfaces, all of that, sort of very well. And actually, to me, Acko is just like trying to get this blend right, deeply understand, the business. It's a risk business, it's a complicated business, but also make it more consumer friendly in with today's tools that might be available. Sanjeev, I probably knew for a fairly long time. He was almost like somebody I would bounce off stuff with when I was setting up the company. And I kind of kept telling him, it's the right time. I think you can handle this better than me. And I'm good at a few things, and I know the way we also, I think it needs also a little bit of maturity. It needs people to have their own space to operate. One of the complicated things that you can end up doing is getting a CEO and not give them any space to operate. Yeah, so it's been a little bit of a learning journey for me. The way, at least, the things that I'm close to, that I manage on a day-to-day basis, are really how the brand shapes up across, how customer experience is delivered. So anything which is horizontal, which is largely impacting how consumers perceive Acko, is something that I closely manage. But all the P&Ls, everything, the revenue, growth, profitability, everything's run by him. So yeah, it's been an interesting transition. But yeah, I think I'm more in a place doing what I like to do, doing it more effectively, and I have somebody who's seen these P&Ls and these balance sheets at a much larger scale, so can identify issues probably earlier than me. So yeah, hopefully it's the right combination. Yeah.
I want to go deeper into this transition and how you came to those crossroads and decided how to, but we'll do that later. Before that, can we go a little bit deeper into Acko? Could I ask you to explain in a line or two what Acko is?
So I'll start with what it is not, because that's the public narrative, which is India's first or like leading whatever digital insurer. That's the definition that, the label, if I can say, that's been put on us. In some ways, it's right, but deeply to me, it's just not it at all. I think to me, one of the biggest challenges with insurance is that customers are not the.
Sorry, Varun.
Yeah.
I'm going to hold you on this.
Yeah.
I want a 1 to 2
One
line
line?
answer
Okay.
on
Well,
1 to 2 line answer
One to
on
two line
what is
answer on
Acko.
what is Acko? Okay. Acko to me is a protection destination for the top 100 million to 200 million people in India who are digitally savvy. That's all I would put it as. It's a place where they get reliable protection. There's no nasty surprise when you're trying to claim, because that's the general narrative for insurance, right? That claim ke time problem hoga. It's that reliable place that we want to build for a segment of users, where whether it's their cars, bikes, health, life, travel, trips.
Do you operate in the life insurance space?
We're
as well?
just starting off in
Okay,
August.
which is interesting because when you said protection without qualifying it as non-life, I was wondering, but wait, does Acko currently offer life
We're
insurance?
starting off. We've moved from that Indian family. Whatever protection it needs, we want to be that destination. Of course, we cannot be that destination for every segment of society. It's very different. The kind of protection need that somebody in a tier 3 town or a village in India has is very different. Their awareness levels are very different. So I think the first phase for Acko is at least trying to be the protection destination for families who are the top 200 million families in India, who are aware and who have the consumption power. to do it. Like that's how.
Would it be fair to say that the market that you're going after are those who have access to the internet and are to some extent
Yes.
digitally savvy as well?
Yes, to some extent, yes.
As an insurer, you sell all of your insurance directly, or do you also you don't have any agents?
No, we don't.
Unlike other traditional insurers.
Yeah. So the thing is we don't have, and people look at us as a digital insurer selling insurance directly to customers. And the more and more I think about it, to me, it is not about selling digitally. Digital is a channel. The challenge that the business has faced, or the industry has faced, and consumers have faced, is the fact that the relationship of the customer is not owned by the insurance company. It's owned by the intermediary. So I'll give you an example. If you have a car dealer or an agent who's done your car insurance, 2 years later he says, "Hey, company A, which I did your car insurance from, is nowadays, not being very cool with claims."
Obviously, we know what's happening
And
because the incentives.
Yeah, and can you move to company B? You probably would, because your trust is in that relationship, really not in that company, A or B. And that to me is the biggest challenge of running this business. And that to me is the biggest challenge why consumers also perceive insurance fairly poorly. To tell you, it's one of the lowest NPS businesses in the world. Not just in India. Like, to give you an example, health insurance NPS globally would be about 14. It's that bad. There's just lack of trust.
I'm assuming that's because for most people, it's something that you pay for when you don't need it. And then when you need it, like, whatever.
It troubles you.
Exactly.
It troubles you when you need it.
So it leads to adverse feedback from customers.
It's inherent in the business model. Like I keep saying, that the insurance customer is the hardest customer to keep happy, because if he keeps, like you rightly said, if he keeps paying you and doesn't need to claim, he's like, I'm wasting my money. And when he claims, something's gone wrong, so he's in a bad mood. If your car's been hit or your next of kin is in the hospital, I don't see how you're going to be happy at that point in time, right? Like, so any small slip up at that time of claims fulfillment, the emotional reaction, it's not like a late order. Amazon shipped you something or Flipkart and it's running delayed and you're a little irritated. If somebody's in the hospital or you're on the road with an accident, you're emotionally high strung at that point, right? So even a small slip up leads to very negative reactions. And coming back to the point of digital, is not digital. We want to own that relationship with the end user.
That's why the brand is so important. You kept talking about one of the things that you work on and concentrate a lot on is brand.
Yeah. I would say more than the brand, first is owning the relationship with the user. If the agent or the car dealer or the bank, who's the seller of the policy, is owning the relationship with the user, it's very hard. There's mis-selling that happens. Incentives are not aligned. They push wrong products because they want more commissions. So you don't end up building, as an insurance company, a direct relationship with your end users. So we are today saying that we are happy to work even with an intermediary, but we would like to control the relationship and the fulfillment experience.
I want to understand that. What does that mean? Because I would have come to that, which is essentially, if you're selling through intermediaries, an intermediary could be a platform, it could be an agent, whatever. So when you say it's important to own the customer, help me understand why is it that an insurer doesn't own it? Technically, if it's a competitor to you and they sell through an agent, let's take the car insurance example that you gave. Now, I may buy through an agent or my car dealer, but once I buy, especially in today's system, the insurer does have my details. They do have my contact details. So why am I not owned by that? What prevents that insurer from owning?
I'll probably delve a little deeper. In some cases, they'll have your details. In some cases, they might not even have your details. In car insurance, let me put it this way, without naming a company, the top 2-3 companies in car insurance by market share would probably have 30% phone numbers for their customers. The car dealers and agents put their own phone numbers. That's number one. Let's take health insurance, where identity is not a problem. Because you'll have to probably do a medical test, KYC, whatever it is. So the insurance company has your details. Having your identity details does not equate to owning the relationship, and I'll probably...
It's just a necessary but not sufficient.
It's necessary. So what will happen is, technically, let's say I'm a car insurer. I get your details from the car dealer. Now I try to make a phone call to you. to say, hey, I can offer you ABCD service, or would you like to buy my health insurance? I've got a custom plan for you. You are not allowed to do that by the intermediary, because the intermediary wants to protect the wallet of the customer, saying, I want to sell what I want to sell to this user.
So when you say you're not allowed, they don't look at it kindly. Is that
They
what
don't
it
look at
means?
it kindly
Because
and
they have a relationship, and they're like, if you do this, we are not going to sell your product.
so two reasons. They don't want to be cut out. If you develop a direct relationship with an insurer, tomorrow you may drop the agent or dealer and directly
The
interact.
standard fear of all middlemen.
A standard fear. So that's one. So they want to continue. They do not want any communication apart from maybe some servicing claim update, whatever it is, between the insurance company and the customer, because hey, please don't take my renewal away because I make commissions on renewal. Don't try to develop a direct relation. Please don't cross sell anything to the user. I'm a car dealer. I've sold you a car insurance. I want the car to be repaired in my workshop, because that's again revenue to me. If as an insurance company, I try to tell you, hey, I can get your work done better, your car repair done better and cheaper in workshop B, he's not kind to me. The intermediary is not kind to me. So essentially, if I want to improve the service levels of the customer, I can't do anything, because the intermediary is saying, hey, get the car back to me. Please don't deviate my car to, some other workshop. If I want to cross sell you something, if I want to update you about a new product that I've launched, this is artificially restricted. Now, is there a rule that you can't do this? The answer is no. Of course,
it's a business relationship.
It's a business relationship, because if you try to do that, you fall out of favor with the intermediaries, and the intermediaries start doing business with other companies who are happy to forego this relationship. People who are happy to forego the relationship actually do more business from a top line, bottom line perspective.
The system incentivizes such behavior where you don't need to own the customer in order to have like a higher top line.
You don't. In fact, it's faster to build a top line, much faster if you don't if you be like what I would like to call a wholesale balance sheet. You're a balance sheet. Okay, I'll give you a very interesting example. There's no difference between lending and lending and insurance. Really, it's just reverse. You give out a loan and you hope to collect it back, right? And therefore you want to give it to the right user with the right intent, right income, whatever it is. Likewise, insurance, you've given your insurance to somebody. Now you hopefully have given it to the right guy who's not going to defraud you, who's not going to show that his car is stolen and try to take a claim, who's not going to buy health insurance after he's gotten sick to try and defraud the system. So it's really finding the right intent for the right user. When there is no access to the customer at this level, like we just spoke about, you cannot underwrite. What you do, therefore, is...
Sorry, I just want to kind of explain that phrase, underwriting.
Yes.
Okay,
let me.
The act of what, like...
so it's easier for people
risk.
Assessing the risk, right? It's easier for people to understand underwriting in terms of lending, because it's a far more popular topic or far more public narrative out there. So you would want to say, okay, credit score, alternative score, income, telephone bill, residence, and say, okay, intent this guy, I can give him a personal loan of 10 lakh rupees. Now, it plays similarly on the insurance side. Let's say if you live 3 kilometers from your workplace and I live 30 kilometers from my workplace, I'm 10 times more likely to have a probability of an accident. I'm just driving a lot more, or let's say I have high claim behavior, that for every small scratch, I am going to use my insurance. There are customers who would be safer drivers. There are customers who would fix small dents on their own. And there are customers who will try to squeeze out every penny from insurance. Insurance is supposed to protect you at the point of mishap, versus there are customers in India who will, or probably all over the globe, who look at as what is my ROI on this?
If I'm paying X every year,
I need to get something out of it, right?
I need to
get something out of it.
Fair disclosure, in my younger days, my first 5-6 years, I used to be in that. Then, of course, we learn that it catches up with you.
It catches up with you,
bonus,
right? No claims bonus catches up. Your insurance keeps getting expensive. You keep getting, now as databases for insurance companies are building, fraud data is being shared between insurance companies. Some insurance civil kind of stuff is getting created, right? So
underwriting is a summation of all the probabilities, all of this, which ends up with some kind of a credit score or
some
a
kind
risk
of a score,
in
some
the
safety
reverse.
score
In
in
the
reverse.
reverse. Got it.
So in that, in the world where the relationship is owned by the intermediary, I just don't get enough data access to you. I don't know what's happening with you. I don't know who you are. I don't know whether you're married. I don't know whether you live in a gated society. I don't know anything. I would just know Rohin, Honda Civic, Bangalore. Like that's all I know. So because I've given away the relationship to the end intermediary, or the intermediary. If I tell the intermediary, for example, I need more information on Rohin, I can develop an application. It can all be real time. It doesn't have to be like a slow process. But it just doesn't work like that. He doesn't give you more information. He's like happy to give you to the insurer, or pass you on to the insurer, who is not going to be very nitpicky and is going to accept the business because my commission just comes through. So this consistently lowers the standards of underwriting. And what that does is insurers tend to underwrite distributor portfolios rather than individual customers. You're a large car dealer in Bangalore. You sell 5 crores worth of insurance every month. By and large, I do 60 crores with you in the year. I'm getting a 10-15% margin on your business. So I will not care who that dealer is bringing in.
You
Is
don't
it
look
Rohin or
at
is
the
it Varun?
granularity
No.
because
No.
you look at it as an aggregate.
You look at it as an aggregate.
The problem with this is that, like,
The problem
you're
with-
deferring this.
The
I mean,
prob-
at some point, this is going to become a granular problem, whether you like it or not.
It
right?
is today also a granular problem. The problem with this is twofold: one on the customer side and one on the P&L of the insurer, right? So let's say Rohin is a great customer. Okay, I have no way to identify that he's a great customer, and he'll be put through that same level of scrutiny and investigation at the point of claim, like any fraudster would be, because I don't know you're a great guy with great intent and a consistently high performing, good performing customer with low claim behavior or whatever it is.
So the point that you're making is that
Yeah.
we often look at the inability to distinguish between customers as I want to identify the bad customers, but
Yes.
you're also saying that it's equally important to identify the good customers
Absolutely.
to be able to give
I
them
don't know
better
good from
deals.
bad. I don't know good
And
from
thus
how do I
everyone-
elevate my experience?
Everyone tends to be treated as potentially bad.
Potentially fraud. See, when you don't know, when you're taking in a customer in insurance, if your controls are loose, if you don't have that granular view, then when the claim is coming, you have to have the granular view then. Then you have to ask for 5 documents, ascertain that there is no fraud, and so on and so forth. You have to situationally assess that claim versus saying, I know Rohin is a great guy. I know Rohin is consistent. I know he's not, trying to game the system. I don't need to ask for 5 more documents. I don't need to make his life miserable. Because if there are not enough controls at the point of coming in, then there'll be controls at the point of money going out. You have to have it one way. You can't have it lose both sides. So that becomes a challenge from a customer standpoint. And on the business side of it, because you're operating with such broad averages and you can't be granular about your business. If you look at the top insurance company in India, which is, let me even name them, it's ICICI Lombard, largest
private insurance.
Largest private insurer, almost now getting as large as the public insurers now, listed, they still don't turn an underwriting profit. It's a profitable company. Just to clarify, there are 2 income streams the insurance company has. One is if I'm able to make money on the insurance itself. And second is because it's an upfronted cash flow business. Sorry, it's getting a little technical, but I'll try and simplify it. You give me the money today, you pay your premium today, your
And I
claims
can
happen
deploy
over a
it.
period of time. So I invest that money. I have a lot of investment. Customers pay me upfront, so I invest that money. So I make interest income.
So it's operational profit versus financial profit.
Yes.
Sort
So
of.
my insurance product doesn't make money for the top 2-3 companies in India after 25 years, even today. The reason the company is profitable is because my interest income from the premiums kind of covers my, losses on the insurance product. That's where we don't want to be, because this is not the model globally.
Yeah, because insurance globally is supposed to be.
It makes money on the product
That's
itself.
right. It is a
has to make
fundamentally
money.
actuarial product
Yeah.
where
it has to make money on the, yes.
Its premise is that you cannot be losing money more than what you're earning.
Yeah. So your cost of claims, your money that you pay to the intermediaries, and the overheads of running the company are more than the premium that you collect for the top 5 insurers in the country, even today, after 25 years.
How's it for you folks?
It's still higher because we are still 5-6 years into the business. Typically, an insurance company would take about 8 to 9 years to get profitable. But the reason why we are investing so deeply,
Profitable on an underwriting basis or overall profitable?
overall, you can get there a little faster. And see, underwriting, you have to be profitable from day one, actually. Okay. The reason why we would not be, somebody like us would not be profitable on day one is because, okay, you can cover your cost of acquisition, you can cover your claims, you're underwriting well, you know good customer from bad customer, you're getting smarter about it as businesses scaling, you are able to identify, see patterns, and so on and so forth. What doesn't get covered very quickly is your overhead cost, because we are saying, okay, we were just a car insurer, now I'm setting up health and life insurance, so it's a new unit, so I have to deploy people, I have to set up a completely new.
So it takes
it
more
takes still
years
time,
to-
right? So our initial businesses are profitable, some of the initial cities that we launched are profitable. As we are scaling, health and life will not be profitable for us for some time, because it's just begun. Life isn't, in fact, not begun, and health has begun about a year ago.
Sorry, one last question on this
Yeah.
before we move on from this. Is you said that the top insurers are still not underwriting profitable, and even after being around for 25 years, and this is different from the way the rest of the world operates.
Yes.
How is it for you? How
Yeah.
I mean, are you different from them? Are you closer to the way the rest of the world operates on that same parameter?
So not necessarily. I'm not saying in that model that they are doing, you cannot do that, because there are companies globally which run the way an ICICI would run, or run the way a Bajaj would run.
I mean, it's a strategy,
yeah,
right?
it's a
You
strategy,
lose in
right.
one area and
Yeah.
you gain somewhere else.
The reason why we have chosen to go down the paths that we have is, and we are confident that we don't get into this, and owning the customer. It might seem like a soft thing, but it is really what completely changes the business model on its head. To give you an example, if you buy a car insurance and the car dealer gets 25% commission, next year you choose to go to the company's website and renew it on your own like a bill. Let's say you do that, or you go to PhonePe and you do your renewal. That original sourcing car dealer next year will again get 25%. Okay. The agent will get commissions for perpetuity. Okay. Even if he's not even shown his face in next year onwards. The reason why this happens is because if I say, hey, Mr. Agent, you didn't do any work for it, the customer is not even talking to you, he's coming and buying off my website, why should I pay you 25% again? He'll say, okay, don't pay me. I'll now call Rohin and I'll tell him, company is not giving claims on time these days, please move to company B. So it incentivizes agents to churn you out and give you out to some other insurance company. So there is perpetuity commission built in.
Got it. So nobody wants to rock the boat.
Nobody wants to rock the boat.
Except when you say that the agents are being paid perpetuity commissions in perpetuity, it effectively means that the customer is
Paying for it.
paying for
Absolutely.
it, right? Because if somebody is getting 25% out of something that I'm paying
Every year.
it's potentially could be something I could not be paying as a customer.
Absolutely. And so that's why the owning the customer and the direct relationship changes everything.
At the point of the first transaction.
At the point of the first transaction. Today, Acko sells directly to consumers. So is my first year cost of acquisition 25%? No, it's much larger, because I have to invest in the brand, I have to invest in the traffic and so on and so, probably double of what a traditional.
But it falls.
But next year it's free. It's free for the customer. He's not paying that 25%. It's free for me. And the annuity revenue starts building in. The customers are then renewing and they form a direct relationship. They come and buy more products. They like the service and so on and so forth. So it takes a little longer to get there. It needs heavy upfront investment, and that's why the brand. And I'll also probably qualify this. We all also tend to, I'm attempting to just break some narratives, hopefully. All, have this view, this fintech, insurtech, this broad world. And there's credit, and there's wealth, and there's insurance, right? Like that's really the three big buckets: you have wealth, tech, credit, and insurance. When you look at it, these businesses are very different from a consumer standpoint. I'm not even talking from the P&L. Forget the P&L. When you look, let's say if I have a banking relationship with a bank for 20 years, and I need a loan. If some newbie who I've never heard of comes and gives me a cheaper loan, I'll take it. I don't care. I want the cheapest loan possible. I want the lowest EMI possible. I have no affinity to my bank or very low affinity to my bank or anybody that I know if somebody gives me a cheaper loan.
Because all money is just money.
Money is just money. Why would I pay more EMI to HDFC or ICICI or Citibank or whoever? Like, I need a cheap loan. So brand plays a role because it gives you some, but it is not the decision maker meaningfully. I'll take the cheapest loan possible. When you take wealth, savings, gold, maybe I want to do Bitcoin, real estate, mutual funds, shares, whatever it is that I want to do, no single manufacturer of any investment product can make all these products. I can't make real estate and gold and mutual funds for you, right? So it's always going to be a portfolio management approach. And there is a lot of value platforms can create by aggregating and helping you manage that portfolio and helping you make money. So it's a very different approach. Here on lending, cost is the primary thing. Here, managing your money effectively, giving you all the options, making it easy for you to manage your money, increasing your wealth is really where the value is coming in. Now let's move to insurance. Do you need 10 life insurance policies in your lifetime? No, you need one. You need one health insurance policy. If you're reasonably comfortable with your car insurance provider, you are likely to continue to renew. You may keep changing cars, but you have that one car insurance. It's not shopping behavior. You need one brand that you trust and you can rely on. Because here, you give me the money first and you hope to get it back if something wrong happens. So the brand gets very, very critical. Very critical. Different from credit, different from, wealth management. Because I need to trust you that you will be around 5 years from now, 10 years from now, if something wrong were to happen. And I am not browsing and doing portfolio optimization कि ये म्यूचुअल फंड अच्छा है अभी गोल्ड में पैसा डालते हैं एक अच्छा पॉलिसी चाहिए लाइफ में I just want one thing I can rely on.
I agree with you.
Yeah.
And I think just an observation.
Yeah.
The way this is changed is for whatever you're saying to be true, it requires the consumer to have this awareness that I need to be with this one insurer for life, right? And the way it's been done in the past in India is that insurance is always sold,
Yes.
not bought.
Yes.
Right? So most Indians didn't really care. An insurer was telling them, get this like policy because you'll get money back.
Yeah,
Right? Like
yeah.
we've seen insurance in
Yeah.
India as, especially through the agent route, being misused because consumers don't understand it.
Yeah.
So what you're also hoping for is this, it's a psychological shift in, if I'm a consumer, I'm
Yeah.
no longer being passively sold something, but I'm actively buying something. So, because
Yeah.
otherwise, why would I? I mean, to continue with your example,
Sure.
if an agent comes to me and says, "This is your car insurance this year, next year I'll give you one for cheaper," why wouldn't I make that same decision? Because at the end of
Sure.
the day, it's cheaper.
Yeah. So so again, insurance being a push product versus a pull product is also a very generalized, broad narrative. Okay, what is pushed, and why have we all as Indians learned that it is a push product? Is because it was sold as an investment scheme by and large, saying itna paisa milega, money back, whatever it is.
That's right. Like
You
the
know,
worst
Yeah. Worst investment
policy
for
in
a,
insurance ever is money back life insurance policies.
Absolutely, right? Like it doesn't make any sense. The lowest IRR that a customer, FD is better for you. So, or ULIPs, there was a ULIP mania 7, 8 years, 10 years ago.
Plays
and,
upon the traditional
plays upon
Indian this thing of
के पैसा
I don't-
बनेगा आपका.
that's right,
Yeah,
right? Like
yeah.
I don't want to give money to someone in the fear of something happens to me. Nothing's going to happen to me.
Yeah,
So
yeah.
why should I make someone else rich? Might as well get some
Might
money
as well.
back.
But so this segment is a complete push segment. I'm 100% aligned with you on that front. And I don't think that psychology is going to even change. And as banks or agents who can continue to peddle something, and partly I do believe it's starting to break and it's happened globally, it's going to break by regulations where these kind of products will fall out of favor because it's just not in the interest of the customer.
A lot of people are now
Understanding
slowly
कि ULIP
moving
is-
towards term insurance
Absolutely,
and saying you
absolutely.
buy protection and keep investment separate.
That's why I said Acko is a protection destination. We are not really, I use the word protection very carefully. We, as insurance company, and with now all the possible licenses we have a life insurance license. Theoretically, I can do a money back policy. I can do a ULIP. I have the license to do it. We're choosing not to do it. I think they're horrible products for consumers. I wouldn't sell it to my family. So I wouldn't, probably want a consumer to have it. So when you take car, when you take health, when you take term, travel, let's say when you're taking a trip, or maybe at best pensions, when you're really trying to, insurance companies also manage pensions. This is what all an insurance company should be providing. In my personal opinion, everything which is laced with investments and all of that is really is regulatory arbitrage, for lack of better words. When you look at protection products or pension, and pension is also to me protection. Why? Term life, it's the risk of dying too early with responsibilities. Pension is the risk of living too long with no income. In some sense. So in this, the consumer psychology and awareness is already there to a degree that I need to get a reliable health insurance. I need to get a reliable, for the segment that's understanding, is looking at it from, maybe they're not consciously saying this to themselves, but that's how. So the reason why brand is important is I would always question that why would somebody buy Acko? They just don't even know us, right? 5 years ago. Even now, I'm saying we are a much smaller brand than an ICICI, Tata, Bajaj, HDFC is. We've grown up with these brands. So if I am looking at selling life insurance to somebody and he has an option with HDFC, it's like I want that reliability, right? HDFC, 20 years. Who the hell is Acko? It's just a 5-6-year-old company.
What's the answer to that?
That's why the investment in the brand. That's why the investment in the experience. I'm not looking at this as a founder that this is a 5-10 year journey. This is to me like a 25-30 year situation. What gives me hope is the fact that a couple of the largest health insurers in the country today were not known 15 years ago. Star Health Insurance is way larger on health insurance than ICICI, Bajaj, Tata, HDFC. They're 4-5 times the size of each of these companies on health insurance as a segment. As Indians, we didn't know the brand 10 years ago or 15 years ago. So new brands can be built. Customers can trust you. But it takes patience and you got to keep going with it. Yeah.
How old is Acko?
So it's like I said, it's about 6 years old. 2017 we got the license, and 2018 I think is when we first started getting some customers on board.
How many employees do you have today?
A little over 1,000. A little over, yeah. Mostly in Bangalore, and we have a couple of other offices in Gurgaon and Hyderabad and Bombay. Yeah.
What's the metric to look at your top line? Is it revenue? Is it premium income? What is it that
it's premium income? We closed last financial with about 1,500 crores in premiums. This year, the year has just begun. It's just the first quarter out. We're hopeful for upwards of about 2,000 crores. So that's...
How fast are you growing right now?
I think we're growing at about 40% year on year.
Is this very interesting, 40% year on year. Is this growth coming from consumers that you acquire who are churning out from this thing, or is there a significant percentage of new first time customers as well?
Again, it depends on the segment. If you take car insurance, it's still our largest business today. Health has just started to pick up. Car insurance, yes, it's a replacement business because it's a mandatory product. If Acko didn't exist, the customer would have bought it from somewhere. So we are basically replacing, somebody. Health, not so sure. Some of the customers that we get have had a health insurance policy before and choose to move it to Acko, or choose to get their policy to Acko, and some are first-time buyers of health insurance. It's hard to say how many today, but yeah, it's a bit of both.
You've raised what, over $450 million in
about
venture capital?
Yeah.
What was your last valuation?
We've just raised, in fact, coincidentally, we just got CCI approval. We had to go and get CCI approval for it. So that came in about a month ago. So this was about
General Atlantic.
Yes. So this is at about a 1.4 billion. Yeah.
Right. And how old are you?
I am 42.
Are you married? Do you have kids?
Yes, I am. Yes. I don't have kids. Yeah, but I'm married. Yeah. I've been married for about 10 years now. Yeah.
How many co-founders do you have?
None, actually. I started off. There was a lady called Ruchi, who was the first person to come on board. So she kind of co-founded the company with me, but she's recently kind of moved on to set up her own venture. But she joined after the company had been set up. So in some sense, she was a co-founder. But otherwise, it's largely been a single founder company. Yeah.
All right. I want to switch tracks to your entry into entrepreneurship
Yeah.
and even take you back. Like, where do you grow up? What do you study?
I have a very interesting background. Like insurance got nothing to do with it. Neither am a software engineer. Neither did I go to any IIT. Nor am I a finance professional. I'm an advertising intern. I did.
And this
Yeah.
is the space that you're operating in is the actuarial space where
Yeah,
essentially it's like just
super
deep
technical.
numbers.
Yeah. So I grew up in Bombay most part of my life. Studied there. I did commerce for graduation. I went to MICA for an advertising degree. I had marketing advertising degree. I had no idea what I was doing. I was not even sure I was interested in advertising, so to speak. I didn't have too many options at that point. So I just went and did it. I thought I'll study further. And coincidentally, I got pulled into a job with Tata AIG. The Tata Group and AIG, which was an American insurer, they had just done a JV in 2001. And I joined them in 2004, straight out of college. I did a stint in advertising with Leo Burnett for a while, and I realized it's not for me.
What was it, client servicing or
Yeah,
creative?
client servicing, some planning strategy, something. I thought it was very. It was just not for me. Let me put it that way. It's just not for me.
Just as an aside, I
yeah.
do think that advertising as an industry is
Yeah.
one of those industries, and this is going to sound like controversial, has just been unable to move with the times and to kind of hold out a promise to talented people coming out of college, saying that this is a sector where
Yeah.
you can join and stay and build and grow your careers. I've just seen way more examples of people who've
Yeah.
talented people coming out. Very few are considering advertising as a sector, and it wasn't like that. Like
It
when
wasn't
I
like
was,
that. Yeah. I think it's less to do with. I feel exactly the same. I echo your sentiments. I think it's, and some of the people that I meet, we have some advertising partners, agencies that we as Acko we work with. We are a large advertiser. We are a consistent advertiser. So continue to meet a lot of people. They're quite talented. Quite a few of them are quite talented. I just don't think that the incentives are aligned. I would partly blame the client or the marketer who does not know what he wants and is not allowing the best work to, potentially shine. I would love to have a model someday, if possible, where if awareness is the goal, or revenue is the goal, or cracking a new market is the goal, whatever goal you're trying to achieve with advertising, why can't the incentives be linked for the advertising partner with your metrics? It just doesn't work like that. So everyone's just managing optics, right? Yeah.
would it be fair to say that because you work in insurance now, you start to see the world through incentives? Because in insurance, you're
Yeah.
essentially seeing everything as everything wrong that's happening is because of bad incentives, and therefore to correct it, you need to really and I mean that as a good
Yeah, it
thing
is.
as well, right?
Yeah,
Because
you just.
all our
I think a
decisions
lot
are
of the business
incentives.
models are like fundamentally, if you deeply go back and think, they're working against you. Let's say there's a media deployment agency who's deciding, whether you should buy ads on Sony or IPL or, put up a hoarding or whatever it is. In a lot of cases, they work on a percentage of your spend. They force you to spend more because that's how they make more money. If their model, their revenue goals, their internal revenue goals are dependent on are they going to give you the most optimized media spend? Probably not. They're going to give you, I'm not saying they do it, but it just doesn't. If I was on their side, I would squeak in another channel for you because I'm getting 2% more. It's converting my revenue. So ideally, it should be different. You should help me save money. You should help me.
I mean, you can't.
Yeah.
You can't use intent to argue with incentives.
Yes,
right?
you can't
When
say
intent and
beyond a
incentives clash.
point. Yeah, it's murky, right? Like people operate usually, I believe, with the right intent. They build long-term relationships. But somewhere or the other, if my company, I'm a media company, and I have a revenue pressure this year, it's a slippery slope. You can't blame the guy. That's I have to run my company. So it's a lot of these incentives. I just don't think should be looked at differently in my.
So you joined Tata AIG.
Yes. Yes.
What we learned.
And it was an amazing experience because I had no clue about insurance. And frankly, if I may say so, at that point, nobody in the company also did because it was such a nascent industry. Till 2001 in India, there were only PSU insurers. All the Tatas and the ICICIs came in only in 2001. So if you look at it, compared to banking or whatever, it's a very young industry. It's just still, 25 years, roughly about 25 years old. Apart from the PSUs, of course. So it had people from banking, it had people from telecom, it had people from some other financial services or lending or whatever. But really, everybody was doing insurance for the first time. That I think was an interesting phase for me because while I was very young and just like barely out of college, I did well and I got to punch way above my pay grade because nobody knew, and I seemed to have done some decent work. So I kept doing larger projects or bigger initiatives, and so that five. And I also got I'd say really good bosses, really good mentors, who kind of believed in me and just asked me to do stuff which are like, okay, great, I'm going to figure this out. I don't know how. Contrary to belief, where large organizations may not be the best place to learn, it's slow culture and it's all red tape and all that. I don't think that necessarily true. Organizations, even startups, can get like that, where they become bureaucratic at certain size and scale. But I think it's really dependent on the kind of people and the kind of culture that's there. I genuinely feel that if you find the right bosses, even in a company which may be reasonably bureaucratic or whatever, they can instill the right sort of way of thinking and thinking bigger. At least one of the things that I learned over there was just how to think a little larger. Tata Group doesn't do small things, like, so you'd be happy with something smaller, like, no, this doesn't make sense. So I think it was a good learning ground. After that, I had a short stint in Templeton, which is in the mutual funds business. And I think about 2010, I quit. I was just bored and I had no plan. I had no interest in being an entrepreneur or doing something on my own, or no great ambition. In fact, I was at a crossroads saying, maybe I want to study more, or like, I don't know what I want to do. This is back in 2010. The only thing that I had a keen interest in technology. I could see how, whether it was the mutual fund business or whether it was the insurance business, they would really struggle with technology. I was fascinated by what a Flipkart was doing at that point. I would just read up everything about it. This 2010, right? The Flipkart was also fairly young, and I was like, oh, the world's changing. What am I doing in this fuddy-duddy financial services space? It's all going to be, the world's changing so quickly, and so on and so forth. So I was at that sort of mindset in 2010. And I was like, I don't want to go back to insurance or banking or financial services or mutual funds. I want to do something which is more, more in the tech world, because I genuinely feel that's where, and that's more interesting to me. So it was just a very hazy idea, and I couldn't figure out what to do. I applied to one or two jobs in companies like eBay and Cleartrip and all of that, because those were the only, I didn't want to get out of Bombay. I was a Bombay kid. So those were the 2-3 names. I didn't even get those jobs, and for a variety of reasons. And I was at this crossroad, and I had met a few friends from IIT Bombay, great developers, had started using the cloud back then. And I told one of the guys who I got friends with that, hey, insurance companies just don't get technology. I don't know what to do in life. You're also not doing anything. Let's just try something out for 6 months. Let's see what happens. So I just took a break. I said, let's just try it out. And Glitterbug was the company that we found. We started selling software to insurance companies back in 2010, 2011.
Reselling or making your own software?
Making our own software. I had seen enough of the problems to know where the
custom software or new software would.
So they would have systems which were really bought by, they would, these large companies enterprise some software. This back in 2010, some of them didn't even, they were black screens. It's like that bad. Their agents, the customer, the insurance company's agents did not have an application on which they could access the company's products, so it was just like fairly rudimentary. So we started building middleware to connect their non-web friendly systems to the web, basically. Some sort of middleware in which their underwriting systems, policy systems, all of that could be made web friendly, so that applications could be built on top of it for agents, for customer service, or for end customers, right? That I knew that unless the middleware was made, it would not happen. And that was probably not very obvious to some of the folks at that time. They were trying to figure out one thing by one thing. Okay, I need a website for a customer. Okay, they'll make a website. I'll buy some Yahoo clicks, but I don't know how to connect it back to my underwriting system. So it was a very broken approach. Of course, those were times where things were not very clear. So we started becoming this middleware company. It spoke to, sold to ICICI, Prudential, bunch of 2-3 years I did that. As I was doing well, I never raised any money. And I once the company was 2 years old, 2.5 years old, we were doing about 10-12 crores in revenue. Basic software services. Some of it had started getting productized. And after that, there was no much growth. Like I knew it would grow at like what 30, 40. I didn't know what I was doing, but Ola was happening. All of these things had started to take shape. And I said we need to productize this, and we need to make it larger. We need to go international or start selling to banks also, and so on and so forth. So I need to raise money now, because I need to expand. I went in 2012 or 2013, I tried to raise money after running the company for 2 years. I went to a bunch of angels. I got kicked out. I didn't get any money from anybody. But I think one of the conversations that genuinely changed my life, and I have repeated this often, is with Anupam Mittal. I went to him. He was a good, prolific angel even back then. I went to him and I showed him what we did and why we needed the money, and and so on and so forth. And he said, like, no, I don't think this is an investable business. But he was kind enough to meet me for a coffee a few days later and explain to me why. He said, this is not going to become more than 100 crore revenue company. So maybe it's a good boutique business for you. But I don't think this is going to become a very large. You're at 10-15 crore revenue. The kind of business model you have, you're not going to get very large. And you're talented. Your co-founder's talented. He was from IIT Bombay. I think you guys should just do something more worthwhile with your time, is my advice to you. It really, I think, shook me up because I thought I was doing well, frankly. And we took Devendra was the name of my co-founder then, and we took a step back and like, hey, really, what are we doing? It just made us sit back and think, and said that we made all this technology. We've connected complex underwriting systems of insurance companies. It's really bad to work with, and we've done all this hard work. Why is the insurance company my customer? Let's make the end customer my customer. And those days, Policy Bazaar existed, but it used to be a lead gen platform. Like you could see products, leave your phone number, and the insurance company would, because also let's look at it. 2013 is not when payments in India was not as what it is today. So, and insurance products are not small. They would be 10,000 rupees, 15,000 rupees, 5,000 rupees from a ticket size perspective. So you would have to go and pick up checks at people's houses because nobody would pay 10,000 rupees, 15,000 rupees on online payments at that point. So Policy Bazaar's model used to be generate the lead, give it to the insurance company does the fulfillment. Partly they would also do it because insurance companies' underwriting systems and transaction processing systems were not able to connect with APIs. And that's the middleware that we had built to connect them to the web. Saying, hey, we can now take this software that we've created, we know how to connect it and create a transaction platform, not a lead gen platform, because we know how to integrate. And that was the pivot to CoverFox. So the same team, same company. Actually, Glitterbug became the parent company of CoverFox. And that's how we got into that business. Saying,
CoverFox was an online insurance aggregator.
Yeah.
Hoping to close the comparison through a transaction.
Yes. And that point, Policy Bazaar was mostly lead gen, and we thought that was the moat into the business, and we'll be able to do it. 2013, we got the platform live. We got finally institutional investors started looking at us. Axel invested, SEF, now Elevation invested in, I think, 2013 or 2014. I don't remember when. And that's how we took off. IFC came on board, and I think 18-20 months into the business, maybe roughly 2 years, 2015, I went back to the board and said, we're in the wrong business. It was...
Why is that? What triggered that?
Not in the let me not put it badly saying it's a wrong business. It's a low potential business. Okay, to put it that way.
Again, why?
Yeah. So
Because
you yeah
from what you said, insurance is a large
yeah.
business.
So yeah, you look at it, and finally, of course, Policy Bazaar also became a transaction platform. They had always the advantage of traffic and brand because they're number one destination. So I'll just put it this way, right? When you run a marketplace for anything, we are running basically a marketplace for insurance, right? In some sense, uh, one of the things that you're attempting to do is two things you really need going for you in a marketplace model. I feel is that you are simplifying lots of selection for customers. Okay, so you go to Amazon, millions of sellers, millions of
breadth of
products,
selection.
breadth of selection, right? And you're narrowing it down, and product discovery is happening, and so on and so forth. When you look at, and the platform has the power because there are millions of small sellers to bring that convenience to customers and also become a destination for the seller, right? So it works for both, right? That's what the platform is able to provide value to the seller and provide value to the consumer. When you do this for insurance, essentially there are only 10 sellers or
And
maybe
they're
20.
they're powerful. They hold the cards as well.
They hold the cards. Out of the 20 sellers, 10 brands is what customers don't want to buy because they've never heard of them. It's like I said, brand is important in insurance. Don't want to buy as in those brands are a hard sell for consumers. So if I want to sell a tier 3 insurance brand today, which a customer has not heard of, okay, I'll tell you without, I have deep respect for the company. Liberty Mutual, which is a global large insurer, entered India and started selling. We did some consumer research while I was discovered. They thought it was a chappal company.
Because there's
So
Liberty is
and they're like, why would I buy insurance from a chappal company, right? Like so you really, customers wouldn't consider some of these brands because for them it was a critical decision. So when you look at a marketplace, you've got 20 suppliers or sellers, 7-8 brands customers don't want to buy. The top 7-8 brands that the customers want to buy are big daddies. They're deeply entrenched with bank distribution, this, that. Whether
their own agents,
they have
bank
their own agents,
distribution,
this, that,
Policy
whatever it
Bazaar,
is.
all of these.
All of this. So you are really not, even today, the largest aggregator, Policy Bazaar, 8,000 crore premium that they do just digitally. Maybe they've gone offline also. They do another 3,000 crores there. If you look at it per insurer, Tata, Bajaj, how much of their top line, Tata's top line is coming from Policy? It's like 2%. No one cares. So they bully you. The suppliers bully you. They say, hey, if you don't give me so much business, I want to pull my product off your platform. So now again, what you're doing is you're becoming that bad intermediary who's like, I don't care whether the product is good or no. I can't afford to let Tata go off my platform. So push the Tata product. So the seller has the control. Okay, the platform has less control. I'm not saying it has zero control. It has less control. Second, I think marketplaces tend to do is create habit, right? Like I live in Bangalore. My brother for a long time was in Gurgaon. I use Swiggy. He uses Zomato. I'm not able to use Zomato. He's not able to use Swiggy for whatever reason. We just got it's habit creation, right? Insurance is not a habit creation product. I'm not going to buy every day. I need once a year. Life insurance decision maybe once a lifetime. At that point in time, I will consider and evaluate every option. I'll talk to an agent. I'll go to Policy Bazaar also. I'll talk to my bank also. I'll talk to my friend also, take advice from him also. And it's a considered decision. It's not a habit category. It's some category. Food is habit, cabs is habit, shopping is habit. I go to Amazon, I've started going lesser to Flipkart or vice versa, or whatever it is. The Policy Bazaar or CoverFox would never get there. It's just not the category. So if you cannot create, supplier control, you cannot create a habit, and you have no control on the fulfillment experience, which is claim.
Then why are you really?
Then what are you controlling? Then I call this business, and I have deep respect for Yashish because he's opened up the online market in India. I think that's a different job that he has delivered for India, because before him there was no insurance online, pretty much. So we Acko today is reaping benefits of what Policy Bazaar has done. But really, when you look at that business model, essentially saying fulfillment, I don't have control. Supplier side, I don't have. I'm not adding much value to. So it's just what I would call a traffic arbitrage model. People who are naturally coming to search anything online today, instead of searching on Google, they search on Policy Bazaar because that's where they get concise, aggregated information, and that traffic arbitrage is what you're able to monetize. Okay. Which I think is a lightweight business model, in my personal opinion. And where you look at globally also, aggregators versus insurers. The market cap of the biggest aggregator today, Policy Bazaar is the biggest aggregator in the world by market cap. There is no other aggregator even as highly valued as Policy Bazaar. The biggest aggregated market is UK. US aggregation never took off. It's just not, there's no Policy Bazaar equivalent in the. There are companies like that with the Policy Bazaar model, but they're very small. They're much smaller than Policy Bazaar also. China, it didn't take off. South Africa, it didn't take off. The only country where aggregation, the Policy Bazaar or CoverFox model has really taken off is UK. That's the only. They have 3-4 Policy Bazaar kind of companies, and all of them are large. But if you look at the market cap and what value that they've created, it's not even 1/10 of what the insurers have created. So whichever way I looked at it, I said I'm not adding enough value to consumer. Supplier is too strong. Claims fulfillment. I sell the product. A company does a not so great job. Insurance company does not so great job
And
on
the blame
claims.
comes to you.
Customers call us. They screw our happiness. They leave us negative reviews. I could do I am not able to underwrite better. And channel conflict. I think the other big reason I think I just call out is, and then maybe stop this monologue, is that if ICICI or Bajaj are selling through a car dealer or a bank, let's say I go and tell ICICI as CoverFox, and I tried this as CoverFox, I will get you customers cheaper because I don't need to put manpower to source the customer like a car dealer. I have enough data on the consumer. I'm happy to share that data with you to tell you who's a good customer, bad customer. Let's develop this jointly. I want a cheaper price for the good users. I said, that's what I want, as the platform. Let's work together. And I'll give you cheaper acquisition than a car dealer. And I will also share data with you. In lieu, I want that when you identify who's a good consumer versus a bad consumer working alongside us, please offer those customers a better price. Because 80% of the customers are good. 20% of the customers are fraudulent or whatever it is, right? So I thought in CoverFox that if I do this, my platform will become better. And as consumers see, good customers see lesser prices, more traffic, more people would gravitate.
A virtuous cycle.
It's a virtuous cycle.
Better people come to you.
Better people, and so I couldn't do it. I said I'll work on zero commission for a while. Let's do profit share, on the portfolio or whatever it is. The channel conflict is so high that the top companies are unable to show a lower price on their website or CoverFox website compared to what has been provided to the dealer. Maruti dealers will stop selling you if the price on CoverFox is lower. So these insurance companies would come back to me, आप पैसे और ले लो, लेकिन हम price नहीं कम कर सकते. You take more commission, we have no problem. But Maruti today is a 3,000 crore relationship for me. I'm not going to disrupt it. Axis Bank is a 1,000 crore relationship for me.
So it goes back to the point that you mentioned earlier, right?
Yeah.
For large insurers, they're viewing their business as aggregate wholesale.
Yes.
Right? And that is in opposition to, you're coming to them and saying potentially, hey, Varun is a great customer. Do you want to give him a better
price
deal?
Yeah.
And that person is saying Varun is 1 or he's 10 people or 20 people. And on the other hand, I have this massive business. So in some senses, it's like, it's the clash of business models as well.
It's a clash of business models.
Way of approaching it versus a more post-internet atomic.
I would agree. Yeah. So I think that, at that time, that was the right model. Back when these companies started off, ICICI, Bajaj started, this was early 2000s, right? You couldn't build a direct-to-consumer insurance company back then. Even now it's hard, I would say. But in those days, it would probably be impossible.
Yeah, and those businesses are large now, right?
They're very large.
And I think the most important thing that at least I've understood when it comes to, if you have, and this exists in publishing as well, right? If you have a large legacy business based on an earlier business model, and you're also trying to create something new, and those two are clashing,
it's almost impossible.
It's very hard.
It's almost, and I think when we talk to public market analysts or we talk to, it's like, why can't ICICI do what you're doing, or why can't so and so do what you're doing? I said, do it. They have all the money. They have, the
Because you have to disrupt your own
you
existing business
you
and
have to
revenue.
disrupt. It's a very hard call, and I'm not saying that you're in between a rock and a hard place, and it's what we classically call this the innovator's dilemma, right? Like you can't disrupt it. Somebody will have to take a call that I'm going to have negative growth. I'm going to get down on profit. I'm a listed company. I need to show quarter on quarter profitability for my stock to gain momentum.
That's not happening.
It's a very, very tough call. How do you isolate experiments? Culturally, you're also very different. I also will go back to the word that I use, protection destination, for these 100, 200 million people. When you look at the other insurance companies in India, they have a broader view, right? They underwrite, they sell insurance to buildings, to aviation, to government tenders, crop, to lots of these things. Personally, my belief is you cannot be excellent at all of these things. You cannot be a great government insurance business. You cannot be a great commercial insurance business. You cannot be a great retail business. The softer point is that the talent also, the team and the DNA also just doesn't remain the same. If you have somebody good at really cracking government crop insurance business and running it profitably, it's a very different DNA and a skill set. I'm not saying good or bad. They're equally, it's just very hard. Yeah.
I agree with you. So just to kind of look at your career arc, you started with an insurer.
Yes.
And then you said, I don't want to do insurance and I'm going to build this middleware, which you said isn't interesting enough, big enough.
Yeah.
And you decided to become an aggregator.
Yes.
And then you finally said, look, none of this matters. We got to become an insurer.
Yes.
So it's like a full circle.
Full circle. And people tell me this, we started off that, I think you mentioned, I don't know whether it was before the interview, saying, hey, this is your third company, or to me, it's just one company I've been doing. Hey, let me sell software to insurance companies. No, it's not working. Let me become the aggregator. No, it's not working. Like I have to, so it's a space that's become very close to me. Yeah.
With the benefit of hindsight, what's your advice to others when it comes to looking at your career and pursuing something that's of interest to you? What's your advice?
Yeah, I think I'm a little old school. I think whatever you like doing, you should give it like 10, 15 years. I think when I take founders or professionals, whichever way, and I think some founders have an attachment to the space for whatever, like they could have worked in it, or they have a unique insight to it, or whatever it is. I think those journeys last, because you are not looking at it as a valuation, or you're not looking at. Insurtech was not a word when I didn't coin the word, or it came. I like, oh, I'm doing insurtech apparently, in some senses. For me, that space was important, or it became important. I think if you have that attachment, how many ever pivots you need, different companies you need, you'll keep sort of banging your head against the problem till you get there, and somewhere hopefully there's some successful outcome at the end of it. But if you get down to a fad, I want to do crypto, I want to do Web3, I want to do,
You're not allowing for, to use a financial term, compounding.
You're not allowing. Your thinking is not compounding. I want to do like social e-commerce is like the big thing. I'm not saying the people who are doing it don't have attachment to the space, but I've also met enough people who are doing it because it's the hot thing. China mein chal gaya. Yeah.
To use the same financial analogy, it's like if you're investing by putting money into one mutual fund 1 year and then taking it out, reinvesting into stocks, and then versus picking great funds or stocks and allowing them to compound over 10 or 15 years, we have evidence that almost always the compounding strategy wins.
It wins. And I say this, with humility, the depths that I have gained, I can challenge that a lot of people in this space have not gained. I have just been at this problem for 15 years. I still don't think I know half the things how to solve it, but it's not the... And people ask me, if Acko didn't happen, I said I would keep trying. Like I would find, the next hour. I don't know what else to do. Like nothing else is as interesting to me as this is. And even with professionals, other team members who work in our team, I keep telling them that, most people who will take Flipkart for, we all had that $700 million ESOP. Let's even take a monetary lens or material lens to things, right? The people who made the money on that were people who lasted the journey. The people who, hey, I want to become AVP, I want to become like, I want to be head of product, I want to be, you're not giving me this opportunity, blah, 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 and keep flipping and not really deepening their skill set, their ability to manage teams, their own compounding. But they actually, I've never seen them make money. Their ESOPs never vest. They're just not there for the, the day the price is there. They've just already optimized for the short term gain. So I think my advice or philosophy is just, as long as you can go, if you can come in as a founder or as a professional, that see, things can go wrong and you may have to make some shifts or whatever it is. Unless you're in the wrong place, I should just give it 10 years. Yeah.
What motivates and drives you on a daily basis?
I have frankly no idea. I can tell you that I was super lazy. I didn't try to excel at school. I didn't try to get into the IITs or Stanford or what. I knew I was not dumb, but I was very, very lazy. My friends would call me lazy. Like, I wouldn't try to ace my assignment, or I was,
You were not driven as a student.
not at all.
What
Not
about today?
Not
How
at all.
driven are you?
I'm very driven, and I don't know why. I don't know. I think I started figuring out this trait in me that I could potentially is when I could make an impact in the real world. When I was working in my first job and I could change things, I set up something which became successful, a small unit. It just gave me like, a kick. Like, hey, I can make shit happen. And I think that's addictive, at least to me. I'm not saying it is to everyone. So, and it just became purposeful. So now I can, if I'm traveling, my dots connect. Hey, I can connect this thing to insurance, or I can connect. It's just your mind is working all the time. But I don't see, I haven't come across any spiritual, deep motivation. It just happened along the way.
Since you mentioned
Yeah.
spiritual, do you meditate?
Not much, not much. I try to get I try to get enough of a workout in a couple of times a week. To me, that's just by myself, my calm space. But it's not like I sit down and meditate. Yeah.
How do you define success today versus maybe 10 years ago?
I think 10 years ago, to be honest, I just wanted to make a company and make money, if I can be honest. I wasn't deeply attached to. I think as you grow a little older, and as you realize that what you're doing, you actually, I would genuinely say, you forget about the money. You just completely, it sounds like cliche or sounds not genuine, if I can put it that way. But yeah, you just completely forget about the money. It just becomes so deeply ingrained with your identity, with what you do, how you think. Your life revolves around you. Your life revolves around this, that it just, success just starts meaning something different.
So
And
let me hold you to
yeah.
that, which is like often, like, when people are young, it's like, I wish I had $1 million.
Yeah.
I wish I was like what's that for you right now? What's your most ambitious
To
success
me,
definition?
to me, I want to. Let me put it. I'll say two things. I want Acko to be a public company. I want Acko to last beyond me, and not be a sellout situation. I think financial services companies like HDFC or ICICI or even Kotak, first gen, right? Kotak is, they can be massive and they can be large institutions. I'd love to build an institution like that in India. That maybe I have to hang my boots 5-10 years from now or whatever it is. Or maybe I'm not the right guy to run it. But I think we are in a place where at least Acko's business model, the space that it is in, I think it has a shot at it. To me, that will be success. That it lasts beyond me. It's not some company that has to be saved because it continues to burn money and you need to find a buyer. I think that will be very, very important to me. Second, I am I would like people who work in Acko to say good things about Acko when they leave. I think that's important to me. People will leave. They will have different career aspirations. They'll fulfill a part of their career in Acko. There'll be some who've been there pre-inception. They're still there 6 years, 7 years. I think they'll do 10, 15 years also with Acko. Some will learn a lot. We will learn from them, the 4, 5, 3 years that they give, and they'll move on. But I think it's important to me. Maybe I'm vain or whatever it is. I don't know. I want people to say, hey, I learned. It was a good place. I think that's important to me. When we've had a disgruntled employee leaving and saying, it hurts me that they said, Acko is a shitty place. Something went wrong with them. Maybe things didn't align. But I would not like to be remembered as a company which treats its like to be remembered as a company which treats its people very well. I think that's important. Yeah.
In many ways, what you're saying are all aligned. If it's an institution that is around 20 years from now,
Yeah.
25 years from now, chances are it needs to be an institution which is able to retain
Yes.
people, grow
Yes.
people,
Yes.
etc., and all of that. as
Yeah,
well,
and
right?
we are very frankly we're very proud of that. We've had most of our initial people are still there. Most of them, I would say 80% of them are still there. Some who come in, don't align, and then leave quickly. That has also happened. But yeah, I'm quite proud of the fact that those people continue to believe in Acko and continue to believe in where we're going.
There is this adage that we are often the average of the 5 people that we spend the most amount of time with.
Yes.
Who would be the 5 people you spend the most amount of time with?
Uh, I think the 5 people that I spend, so Sanjeev and Vish. Sanjeev, who's the CEO, Vish, who's our Chief Product and Technology Officer. So I think pretty much everything that's critical in the company is done between the three of us. So we're constantly talking, maybe grabbing lunch together and just. So I think those three, my wife, of course, and my parents. I think my parents were in Bombay. I moved them to Bangalore. I requested them to move to Bangalore after COVID. Yeah, so these are
How are
probably.
they liking Bangalore?
Yeah,
Or
they're.
how much
they're
are they resisting Bangalore?
No, they aren't. They're liking the weather because they've lived in Bombay most of their life, and taking a walk in the afternoon was impossible in Bombay. But now they take a walk in the afternoon, so they're liking it. Yeah, these are probably the 3-4 people that I spend most of my time with.
If you could go back in your career
Yeah.
and change one thing, is
Yeah.
there something that you would like to change?
Not like I don't think I would like to change something. I think I honestly believe that everyone has their own unique journey, and I had to do a glitter bug. I had to do a bunch of these things to get to get to
fully
where
aligned with you on that.
So while the Glitterbug to CoverFox period as an entrepreneur was not very fruitful for me because those companies didn't do well, or those companies I had to move on and set up something new. Today, what I'm able to do, or what the opportunity I've been provided. In fact, even to the extent that let me put it this way: if an individual back in 2016 went to IRDA and said, an individual, I want to open an insurance company, they would just tell you to get lost, politely. I did that. And that was because the same regulator had seen me because of CoverFox, and I could have this conversation. They at least thought of me as somebody who's credible, who's honest, who's trying to solve something, who's maybe outlandish in what he's asking for, but I was not an unknown commodity to them. So that credible. So I don't think I would have changed anything. I think the only thing if I would not change, I regret, is that my early 20s, I wasted a lot of time. I just wasted a lot of time. I think I only started getting serious about doing something, whether it was glitter. I really tried to put my mind at something when I was 30. So
There's a lot of evidence that shows that
yeah.
most successful entrepreneurs, tend to be older than we think. And perhaps the point that you said, right? You need to have that open mind and unknown explorations. Like when you're young.
No, I was not even exploring anything. I was just like doing my job, taking my paycheck, having a drink with my friends, and going to Goa. Like that's all I was doing. Like I had no aspiration. It wasn't like I was an avid reader. I'm an intellectual. None of it. So I just sometimes feel that maybe I could have done more with my time then. But yeah, beyond that, yeah, nothing else.
What is it that you feel you add most value to Acko as?
I think the biggest value that I think I bring to the table is connecting the dots. That's it, actually. I said somewhere in the beginning that it's a large sector, it's a deep business, people who understand it, largely straight out of Bombay, and they understand this business really well. And I'm using loose placeholders. It's not like nobody in Bombay understands technology or nobody in Bangalore understands insurance, but as a general narrative. The Bangalore world, which is really product, design, data, the way to solve problems differently, these two worlds, I had the opportunity to be deep in both. And I can safely say that there are not more than 10 people or 20 people who have had this confluence of careers, who deeply spend time in that regulated business and deeply spend time on the technology side of things. I believe that gives me a unique perspective of where these dots connect. How, and I keep telling the team that if we can make these worlds work together, and it sounds that it shouldn't be hard, get the right people in. I can tell you the first 3 years at Acko, I struggled with this clash of culture. The way they do things, the way these guys do things, these guys would come and question why is an insurance policy even designed this way, versus it's like aise hi hota hai. Like you don't even get it. It's an actuarial calculation. Like it's very hard to get these people to. I think that ability to traverse both worlds is what I really bring. Now I'm proud of the fact that these cultures have now meshed in Acko, and that is really where the magic will happen. So I think my biggest value add is continuously trying to connect the dots in these two worlds. I know it's a little esoteric at a high level, but yeah, I think it makes a big difference.
I think that's where the value creation
Yes.
happens, right?
Yes.
When there are two silos, both of which are valuable in their own way, but
Absolutely.
they are also very divergent.
Yes.
If you can get them to connect, that's where the value creation happens.
Yeah.
You've obviously hired a lot of people over the years.
Yes.
How do you spot talented people? What are you looking for?
I'd say right now my hit rate about, and let me talk, I'm not talking at maybe people who are just starting their career or whatever it is, but at least people who are mid or senior management. My hit rate, I would say, is still 50% of where I thought the guy was great or the person was great. And when they actually came on board, it's like half the time it's worked out very well, half the time it's just not. I was probably elated in the interview and finally it didn't work out for me or it didn't work out for them. So I still don't know is my first answer.
Yeah. Please continue.
Yeah, that I still don't know. There are some telltale signs. I know what to avoid versus really what to look for. I think it's a little bit of elimination for me, like even asking, I'll give you an example. One of the pet questions that I ask in an interview is while trying to get a leader on board is, if you had, like the same question you asked me actually coincidentally, and that's why I remember it. Last 10 years in your career, you wanted to change something. If there was anything that you'd do differently, what is it that you would have done differently, if anything? And you would be surprised that very few people have the humility to say I did these 3 things wrong, and and I handled my team badly. I didn't think I coached them enough. I think my team was operating in silos, and and I had to learn the hard way. A lot of people, I should have, some people even take it back to, I should have taken an admission here, or I should have jumped that job. It's about what would have worked for them better, versus saying, hey, how they could have operated and contributed better. It's a very clear sign to me of somebody who's constantly looking to improve and better themselves versus somebody who's improving their outcomes. Their outcomes will improve as a byproduct of if they do this part well. But I think that to me is like a telltale sign. It's very difficult for people to answer the question, how do you organize your week? Like just answering your question, like what do you spend time hiring? Half the time you'll realize, at least I've learned to realize, that people react to the work that lands in their inbox versus saying, hey, I have a very clear plan. Parts of my team are weak. I need to spend consciously a day a week mentoring them, coaching them, whatever, or at least spending time with them. I need to do my reviews a certain day. I need to build my future team capacity or whatever it is that I need to do. They don't have a plan, so some of these, not that I do or I'm perfect at these things, but I know that these are things that I need to improve to get to do my job better. But I think people I tend to stay away from, if I can be honest, is people who don't even have an awareness of what learning or what they need to improve or whatever it is. I'm not looking for perfection.
And I think that question that you asked, right? Like, what would you do differently? And I think you talked about outcomes. The way I look at it is that, the response that you get is the person saying that if I had done this, differently, this is how different my resume would look
Yes,
today
absolutely.
versus how different I would look as a
Yes.
person.
Yes.
You're trying to look for,
Yeah.
you talked about awareness. You're
Yeah.
essentially trying to find people who are keen to grow as persons and
Yes.
people, not grow their resume, because the
Yes.
resume is the outcomes.
Yeah. Yeah.
Right, very interesting. You've done obviously like $450 million plus, is a lot of venture capital. And I'm sure you've had to meet a lot of venture capitalists along the way.
Yes.
What are some of the learnings from your failed attempts?
I think there have been lots of them. I think I would say 80% of the time it's your problem why it's failed. Because it's not like you are not able to articulate. What's obvious to you is not obvious to them, is something that, and at a very, very literal level, you have to like really break it down sometimes. Because a lot of what I have tended to do initially was, this is Acko, this is what we do, this is how metrics look, this is our broad strategy, this is our large game plan, this is the vision, whatever it is that you do in a pitch, without really contextualizing of how they see the market. I think that's been like a big learning for me, that if I don't contextualize the market, I don't have to talk much about Acko. Acko's benefits and virtues and probability of success is far more evident to them once they know, if they start seeing the world through my lens. If they have the broader narrative in their mind, अरे insurance push product है, अरे ये है, अरे वो है, like you need lots of agent, you need lots of distribution, how much is the online business, they come with a sectoral view. That sectoral view is very hard to break, because they have a view and they're not able to contextualize what we are seeing. So a lot of my failed attempts have been where I think I have had the inability to contextualize and get them to first see my vantage point before they see my numbers.
For instance, why are you an originator?
Why do you do things the way you do? Why is, like, I think Digit and us get spoken of fairly together. They're 5 times our size. They're like, hey, what are you guys doing wrong? Like, they're like 4-5 times your size. And I said, right, like it's, if you don't want to own the granularity, I can scale tomorrow, pay 2% extra commission, just take on as much business that you, in any risk business, in lending or in insurance, the easiest thing is to do is grow. I also said we grow at 40% is because if we try to grow faster, we'll take on bad risk. So it's very difficult to explain a lot of these nuances, and I think that's been my learning.
Sorry, I have a tangential question which relates back to the point about granularity. Now, if you're saying one of your common themes has been, we want the right kind of customers and we are willing to accept a trade-off of slightly lesser growth for better quality of business and customers. But at some, like, what is the positive payback from this? Like, when you look at it over 5 years, 10 years, or 15 years, what will you have which others may not have because you chose a slower, more deliberate strategy today? Obviously, I mean, this is a business. So if you're choosing to give up something today, it must translate to something 100%, in the future. What is that?
I think 2 very clear things. I think one, what it does is that because you're not paying recurring commissions and you're a better underwriter because you have data and you have been able to weed good from bad. And this is also muscle you develop. Day one, when we started, all our underwriting technology calls were wrong. It's not like we were underwriting customers better. Today we are, because it's taken us 5 years. So anybody new who does it is also follows this path of granularity is going to be able to build their own risk models, figure out what's good, what's bad. Maybe you're a great customer, but you live in Rohini in Delhi with open parking. I know your car is going to get stolen. Probability is 3 times. This is all knowledge and data that has been built up
Sorry,
over years.
in that example,
Yeah.
how are you getting this data?
Which one?
That in Rohini, you stay in an area and you have open parking, so the chance of getting stolen.
With addresses, you're able to start figuring out clusters within. So we underwrite a car insurance book. There are thefts that happen. We pay for the car. The car
So
is
you're
stolen.
obviously feeding that
We're
back into
feeding
your
that back.
models.
Okay, here are clusters within cities where thefts are quite common. Okay, what kind of car? Why is the theft happening there? Okay, there is not enough gated societies in this area. It's all independent bungalows with parking on the road. Oh, that's why it's happening. So you feed it back, right? Like so.
So does that translate to higher premiums?
Yes, it could. It could. Or if something is highly fraudulent, not high, very high propensity for theft, we may not even offer a good quote. Because,
Sorry, I mean, I must ask this question because I was under the impression that, for instance, in countries like, let's say, the US, the premium that you get quoted can dramatically vary
Yes.
because of various
it
data
can vary
points around
dramatically,
either, right? And in India, my understanding as a layperson, please correct me if I'm wrong, is that there are IRDA regulations that prevent how much of variation that can happen. Are you saying that, for instance, if I stay in a particular area and that's known to be prone to thefts, I could get a much, like, that's allowed, that
Yes.
exists today?
Acko can. Acko does today also, as of today.
Also, the thing is that it's possible, but not everyone is doing it.
They're not doing it because they're offering a rate chart to the Maruti dealer.
Got it. So it's not that regulations are preventing it, it's business models are
The
preventing
regulations do exist in the realm of what you're saying. What they say is that you have to be clear why you're charging somebody more or less if they audit you. You cannot say I have, like, let me put it badly. I have race, religion, gender. I don't insure Hindus or Muslims, or I have those kind of issues that they want clarity. Health has different rules. For example, let's say you are my health customer and unfortunately some chronic illness happens. I can't next year now say your premiums are double, because now you're going to constantly be claiming if you've got a chronic illness. But yeah, apart from principally things that are wrong to do, it's all free to price the. Principally, I can't take on a health insurance customer who gets cancer, unfortunately, and say your premiums now double now, because now 4 years you're going to keep claiming, right? Doesn't make any sense. So
from what you're saying, again, like, to go back to your recurring theme about it's the narrative about the sector which is important. What I'm seeing is that there are a lot of legacy business models and the way business is done.
Yeah.
The entry of internet, and now as a result of which, the influx of large amounts of data that insurers will have,
Yes.
and the freedom to be able to do pricing around it seems to lead to a place where, I mean, it's kind of ripe for disruption, right?
No, absolutely.
Because it's, on one hand, legacy business models, lots of data and intelligence, regulatory freedom to experiment and innovate a lot more should ideally lead to much more.
Much more, and that's why the outcome that you were asking for is that fact that you have more data, the fact that you're not recurring paying very high commissions, leads to a very different financial outcome. It's far more profitable. We are hopeful of turning an underwriting profit while we are still younger. I don't think we want to be the only way. So I don't believe, for example, if a top private insurance company in India after 25 years and 16,000 crores, we are at 2,000 crore premium income, I told you, they're at maybe 16,000 crores. They're 25 years old. At that level, if they're not profitable on the underwriting level, I don't believe any further scale will get them. More time, more scale is not the answer anymore. What we believe is that this model, the way we are going about it, will get there. We'll get to a point where we own the customer, we own the relationship, we don't have to pay recurring commissions, we have understood good from bad. First principles, right? Like, going back to first principles is, I need to know good customers from bad if I'm an insurance company. I need to not pay very high recurring commissions. Okay. I want that the agent should not be able to take my customer away from me because somebody else is offering that same agent a higher commission for my customer. Right. So these are simple principles that we built the design of the business on, because these are the ills why that is not happening. So I think we'll get there. And the second thing is the regulators also opening a bunch of very cool things. Insurers have been looked at as risk carriers. They have not been looked at as companies which can do other things. For example, today a bank can, you go to a bank app, they'll sell you shopping voucher to points to, so they have, some of them have e-commerce offers going on within the bank, and insurance companies are not allowed to do any of these things. today. Okay, it's changing. There's an insurance bill that was supposed to get passed. Maybe it's going to get delayed by a year or whatever. But the regulator is very clear that insurance companies will be able to sell other insurance products. Sell other financial products as a distributor. I'm a manufacturer and originator of insurance, but if I want to sell mutual funds, today the regulation doesn't allow me. I can.
So thus, when that happens, owning the customer becomes a huge advantage then.
Yes, because today we started offering some allied services to our customers saying, hey, you want to sell your car because I know how old your car is, how many accidents it has. I know everything about your car. I can get you a great quote for your used car. I can unlock this value. But I need to know who the customer and the customer needs to be willing to talk to me.
So this is a shift to now truly seeing the customer from a lifetime value perspective.
Absolutely.
As opposed to seeing customers as they come in, go out, depending on whoever's bringing them.
Yes.
Versus like a lifetime value.
Yes.
That
That's
in this
what exactly we are
family's lifetime,
yes,
I can now potentially look at lakhs worth of business or possibly even more.
And it's not a small business. Like Indian family, middle class, upper middle class Indian families, protection wallet, I'm not even talking about allied services that we can sell them, is about $800, $600 to $1,000 a year, depending on the age of a family. Term protection, health, car, bike, travel, whatever. Maybe some expensive gadget that you may own. We do warranties and stuff for the gadgets. This wallet, and lastly, is between three products, term, car, and health, is about $700. It's a lot of money. Annual.
So Acko's bet and your bet is to capture more of this
wallet
through a single brand,
yes,
as opposed to the aggregated, like everyone will play for it, which is the default.
All right. And there'll be some people who never believe in Acko.
It's all right. I'm assuming you're not aiming for 90% market share.
This is the good part about this business is globally and in India also it's played out. This is a fragmented market, always is a fragment. Even the top insurers in the US, the top three will own 30%. And then there's a long. India mein bhi wahi ho raha hai. So this is not a winner takes all market.
I have a very interesting question to you in the context of incentives and something that we were just discussing earlier around how premiums are priced. We know now that, for instance, in the US, if you're building a home in certain flood-prone areas or at risk of fire, you will not get home insurance. Right?
It just started to happen there.
That's right. Right. Like, now in Bangalore, during the floods last year, you must have seen like,
a lot of claims.
Right. And one of the questions was, how can you, obviously, if you're waiting for people to solve the problem by themselves, it's not going to happen. So how can you incentivize people to not do that, right? So in today's construct, like if you stay in what's definitely known as an area which was built, let's say, over a lake and which has been flooded 3 times over the last 6 years, say, would you get home insurance? Would you be able to sell your home? Because this now comes down to protection, right? Like, if you have data that shows that this is definitely what happens and there is no way it's changing, etc., how does insurance protection come in here? Is it even coming in here?
Unfortunately, I don't think we're there from a maturity of the insurance industry standpoint. So cars going down is a whole different ballgame because it's an absorbable risk, even if there are, it's not yet reached the California fire levels or whatever that we are able to today price it in, and ensure that the pricing it in or charging for it in some small way is not so large that it is hitting your wallet as a customer. And as an insurance company, we've learned to do it because every city, right now as we speak, Delhi is undergoing floods. 3 months ago, Bombay was, last year, Hyderabad also happened. Chennai also happens once in 3-4 years. So we have learned as an insurance company that every year one metro city is going to go down. Okay.
What is the granular version of that?
You can't. Your granularity breaks, okay, because you can't do anything. The whole city is going down, right? So, so from that perspective, it's possible to price it in. It's also possible to what we in our business called securitize or reinsure. So we also buy insurance to protect our balance sheet. So there's something called NatCat insurance, which is natural catastrophe insurance, and my entire book goes down. all my customers are affected. I can't afford it, right? Like I just can't. It's a probability game. I expect 20% of the customers to have problems.
Yeah.
If 80% of them have problems, I don't have
So
a
you're
business.
insuring yourself.
So
and
we are
paying
insuring
everything.
against freak events, black swan events, or some of these natural catastrophes, a flood, cyclone,
Is that
whatever.
going up as the share
Yeah,
of premium that
yeah,
you pay as
yeah.
a
It's
business?
going up because whether you call it poor infrastructure, climate change, whatever it is that you want to call it, somebody's got to pay for it. So in some sense, we see it going. I'll give you an example. Till 3 years ago, health insurers would buy a pandemic coverage because it's I've underwritten hundreds of people or thousand lakhs of people, and there's a pandemic. I have to pay all the hospital
Till
bills.
3 years ago,
Yeah.
meaning before the actual
Yeah.
pandemic struck.
Yeah. Now, if you try and insurers used to buy pandemic insurance, a part of their securitization strategy that black swan we should be protected. Some of them had forgot to buy also because like nahi ho raha abhi itne saal se,
Yeah,
whatever.
it was like a checkbox somewhere.
Yeah,
saying
checkbox
that,
somewhere or whatever. Now, you cannot run a health insurance business in India. You have to again absorb the risk because pandemic insurance is so expensive that you can't run the business only. Like if I have to buy pandemic insurance today as an insurance company so that COVID part 2, God forbid it never happens, and I want to say that, hey, if COVID happens and 20% of my customers are in hospitals, I need insurance, they'll probably take away 40% of my premiums.
I mean, so because now they've gone from theoretical assumptions to real world assumptions.
To reality. So it's getting harder and harder. So I don't know what the answer is. Some of the answers will lie with the government. Some like one of the things that happened after COVID was the government and insurance companies coming together to create what is called a pandemic pool, because no private balance sheet is being able to handle it. Somebody will go down, right? Completely go down. So you'll have to create these pools of risk. So I don't know what the answers to flood prone areas will be. I don't think if there are places in Bangalore which constantly keep going down and property values fall there, so much data is not yet collected for that to starting to happen right now. But yeah, you'll have to have, in some places I do believe government involvement will start happening.
What are some of the pet phrases that you're known for inside Acko?
I'm not convinced. Yeah, I think
That would have been my next question, which is what is the one line that your team dreads hearing from you?
Yeah.
So I'm assuming it's this.
Yeah,
I'm
yeah.
not convinced.
Yeah, there'll be a lot of work that unfortunately they would have put in, and I'll be just like, no, I'm not convinced we are there yet. So yeah.
What are
that's
the
the
2 or 3 most common adjectives colleagues would use to describe you at Acko?
I think I don't know what they would describe me as, but definitely as I'm reasonably high energy for sure. Whatever time of the day, if we're discussing something, I think Sundays, Saturdays, whatever it is that I need to do, I think it just gets done. I think energetic maybe for sure. I don't know what's the adjective, but connected back to the I'm not convinced is I am very happy to keep waiting to find the right solution, but not deploy something just because everybody else is doing it. Insurance actually is like everybody has an opinion because there are 20 other companies doing something globally. It's an old business, and it's very easy for us to fall into that, so a line that I use and what some of the team members at least have started to identify is that market consensus leads to mediocrity. Okay, like if everybody is doing the same thing because this is how it's done, then you'll fall into mediocrity. I frankly use this with my investors also. When they come and say, "Are ye ho raha hai, are wo ho raha hai," I said, "Hum bhi wahi karenge." So what's the difference? It'll lead to same mediocre outcomes. So you got to be a little patient, and so I think those are 1 or 2 things that the team definitely identifies. That not convinced. I think we're doing something mediocre, maybe.
Office or work from home?
Office, big believer. We are 3 days in office right now. We are contemplating the mechanics of making it full 5 days because we made some offers in COVID which were remote and so on. So we can't now tell somebody to just leave their family or their job and or kids and just come over. So we're figuring it out. But I do believe that for all the traffic woes and the practical side of that conversation, I think, and when we I think after that Omicron wave or whatever, around that time we had made it work from office. Even then, we were not contemplating too much, and there was resistance in the company. I wouldn't say there wasn't, and at least my view was, or the leadership's view was, that it's a team sport. You can't play alone at practice at home. You just can't. I think collectively building a company, I think, is a lot more than getting the job done on time. Uh, it is to me like how you would look at sport. You can't practice football at home. You just can't. You know. To some degree, flexibility is to avoid traffic. All of these things we can do, but you can't be a remote. At least I don't feel confident.
How do you run your week? Are you a calendar driven person?
Yeah, by and large, a calendar driven person. I think I'll usually pick up top 2, 3 things that are on my mind. Either are some things that I want to get a move on, or some things that are worrying me, that things that might not be. So I also have, I think Acko has also reached a point where I can keep shouting, but nothing will move. It's a ship that now, has its
Or
own priorities.
conversely, you could keep shouting and yet, or not shouting, and stuff will still get done.
Still get done. Like I think one of the things that I'm quite excited about where Acko is going, apart from the business and so on and so forth, I could literally go off for 2 months, nothing will happen. Okay,
That must be very satisfying as a founder.
Yeah, so I can literally sometimes I go to office and like I have nobody to talk to, or I have nothing to do. I literally have nothing to do because I have work to do in terms of future planning, talking to investors and so on and so forth.
But the day-to-day business
I have like I even if I can see it going wrong or see something going wrong, I know there are people that are looking into it who will probably arrive at the same conclusion a week later, or whatever it is. So there's no point me being frantic about it. Some places is good, some places it's not so good. But I think at a larger level, it gives me that feeling of saying that, hey, we can get to that institution building, we can get to where people can collaborate, take the right decisions more often than be more right than wrong. You will go wrong, but be more right than wrong. I think we can hopefully be in that direction.
Earlier on, you had said that there was this transition where I think you were like, there are things that I don't enjoy and there are things that I enjoy and I'm good at, and I want to do more of that. Do you remember, like, when that happened and after how many years of being an entrepreneur?
So let me put it this way, maybe slightly different. Anything to do with Acko, I enjoy. Like I can have degrees of saying, hey, I prefer this, but I'm not hating the other thing. Even if I have to I still answer every second comment on social media where a customer complains. That's the only social media presence I have. I don't tweet, I don't write on LinkedIn, I don't write blogs, I don't do anything. The only social media presence that you will see from me is when customers complain on LinkedIn or Twitter. That's when I respond. Maybe I respond to maybe 30-40% of them. Of course, I can't respond to all of them, but I personally respond. So I enjoy doing any. To me, it hurts when a customer says Acko is a shitty company. Like, so I will just jump on.
Connecting back to the earlier point where you said that it hurts if an employee who's leaving says
it feels bad. Like it's my baby. Like it's something that I've been so attached to. If people say, and I know we have the right intent. I know we don't want to cheat customers for a small amount of money. I know that we are trying everything possible to ensure that we have smoother claims, faster claims. There are some things which are regulatorily. I'll give you an example. Auto insurance, car insurance in India, by law, by the way the regulators designed the product, does not, and in that you have to go with the regulator's product. In car insurance, there is no leeway of figuring out your own product. I can't make my own car insurance product. Health insurance, you can do a lot of customizations, cancer care, this care. But car insurance is completely, there are 3-4 ministries involved, right? There is accidents, there's police, there's road ministry, there's insurance. So you can't deviate from the feature set of the product. That feature set as defined by the regulator today, hopefully it will changes. Consumables, nuts, screws are not covered, okay, in insurance. This is defined by the regulator.
Okay. Thus, it exists as a rider.
Thus it exists as an add-on. Most people while buying don't pick the add-on, okay, and most people don't understand this is the regulator's call. Or not Acko's call.
But they will misunderstand that as you're trying to hold something back.
वो यार 20,000 रुपए दे दिए 800 रुपए काट लिए. Like that that pettiness that comes in, and we are not trying to do it. One of the things, the calls that we took very early on is that we will pre-bundle that rider in the price, because explaining it is more complicated. So we pre-bundle it so that we don't have to cut that, customers don't, because if I give it out separately, again, some customers miss it, So we know we have the right intent. But even then, when customers complain and they say, hey, this is a fraud company, like reaction, social media reactions are also quite stark, right? Hey, this is a fraud company, they're cheaters. And,
it's very extreme.
It's
right?
very
Like,
extreme, right? So,
and almost always will tag the founder or the
it's
CEO.
always tag the founder. But I will be at, I want to reply, my calls will start going on to the team. It's been half an hour. Why is no reply, going on? So I prefer all kinds of work. It's just that I do believe that somebody like Sanjeev, who's come on board, has a much more nuanced view of the PNL. He sees risks in the PNL before I do. Okay. So it's better for those set of eyes to be looking at that. Because he's seen large balance sheets, right? See, I have a vantage point on the business. I'm connecting these two worlds. That's my so-called strength. And I should use that strength as much as possible. But if somebody can understand these parts, risks in the, because we are in a risk business, these parts better than me, what's going wrong, I think founders also have this exuberance, right? Like, we are all exuberant people. We see only the positives. Ye bhi ho jayega, wo bhi ho jayega. So we invest in projects which are way out in the future. I think people like Vish and Sanjeev give me the right balance. They pull me back, right? Like, hey, not the right time. We need to hold down. We need to let this thing stabilize before we, jump onto the right things. So for me, that sense of awareness was most important. That it cannot be my calls, and these calls coming in is actually better for Acko, because I can myself lead it to trash by, trying to push harder, trying to push faster. So that balance is good. I think there are enough debates that happen. I don't align with them sometimes. They don't align with me sometimes. But I think that's been the biggest learning for me, that they don't need to align with me.
That's great. Before we move on to one last question here is, and it's on the same topic, which is, earlier on you said that, when you're interviewing people, you try to understand what, are their work weeks planned, or are their calendars a function of what comes to them?
Yeah.
Right. And as a founder, and I think I'm still talking about the transition, right? Stuff comes at you.
Yes, all the time.
Right.
Yeah.
And much as you say that you don't mind working on any of them, it's impossible for you to take all of it up.
Absolutely.
Right.
Yeah.
So there must be a framework. And this goes back to the point about what do you want to do? What do you add most value at?
Yeah.
Where you said, if 10 things come at me, I'm going to do 3 and reject 7.
Yeah.
Right? What is that framework that today allows you to decide what are those 3 things that you pick and 7 things that you reject?
I think to me, the first thing is the 10 things that come at you, and making those top 3, top 4 kind of choices it's just very simple framework saying, is there a fire? Okay. Which is urgency, right? For example, there could be a new regulation which is hitting us, okay, which needs us to disrupt any roadmap that we have, or do anything. And I need to ensure that everybody's attention is here, right? See, one of the things that a founder, he or she may not be effective, but the best thing that happens with the founder is that they get attention in the company when they say something, right? He may not be effective at solving the problem. So what you're trying to do is use your...
So you in some senses, you have a bell.
Yeah,
which
I have
everyone,
a bell.
Right? So
it's I may not be the best guy to actually execute or solve any of it, but I know I can divert attention.
You know when to ring the bell.
When to ring the bell. So I think to me, the framework is there a fire? Is there something that we need to look at? And that fire could be regulatory. That fire could be, that we are spending a lot more than we, budgeted. Or the CFOs come to me saying, hey, we're spending a lot. So some fire.
The fire is one.
Fire is one. Then I just pick up what's going to have the most impact.
How do you pick? Yeah, okay. That would have been my next question, which is, fire is obviously stuff that you need to ring a bell for. But many of the other things could be something which there is nothing urgent.
Yeah.
But like you said, it's a 0 to 1 project.
Yeah.
Which, Do you have a framework for picking that?
So I don't think it's a framework. I think you get, at least I don't have a very specific framework, but I think you intuitively get a sense of the business and where you are. So I know for a fact that health insurance is something that Acko has never advertised. Okay. I also know that, I'm just giving you an example, and health insurance is more trust based purchase than maybe car insurances. Uh, and we are going to launch health insurance advertising or a campaign for the first time. Now I want to be on top of it, because this is not just about getting health insurance right, or getting some demand or traffic for health insurance. It is about now repositioning the company from a car insurance company to a, because largely whatever you've seen of Acco is car insurance ads. Now we need to traverse categories, so it's a larger call. I want to be on top of it. I don't want to be this to be like any other project that I'm reviewing. So you just get a sense of,
This is transformational.
hierarchical,
This one is transformational for you.
transformational, right? It's hierarchic. You understand the hierarchy, and you understand the time sensitivity of it. So I think it's intuitive.
What are you paranoid about?
uh I think the one thing that I'm paranoid about, and which tends to happen, and we consciously try to root it out, is that as you grow larger, you tend to become more mediocre and more bureaucratic, and we see that. And I'm not saying
Organizational entropy, which will
yeah,
just
it just happens. We are seeing it. I think leadership, me, a bunch of us are trying to debug it all the time, find better structures, lessen the number of people involved in decision making, and I think that worries me, because I've seen uh, all the time that the creative quotient of the business keeps coming down. Because you then, five people have to collectively decide, then everybody takes the path of least resistance, right? अच्छा अभी ये कर लेते हैं, बाकी
decision by committee.
yeah, so tends to happen. Somewhere it's needed, somewhere it's not. Yeah, that's my paranoia, because there is no formula to it. There is no playbook to it. You have to, this is what ails companies. This is what separates from an Apple from a BlackBerry, or whatever it is, right? So I don't know how to get there. So that's a big, we have to constantly keep working on it, I guess.
Just the last few questions. On a scale of 1 to 10, how happy are you with your life?
I'd say that's a tough one. And never been asked to put a number on that. But yeah, I'd say I'm content more than happy. I also believe in being. I don't have too many highs or lows. If Acko becomes a unicorn, it's not like I'm going wild having a party or like, oh, I've cracked it. It's a mellow high, and then it goes down. So I would say maybe whatever. I'm 7, 8. I'd like to be between 6 and 8 all the time. I think it works better for me. Yeah.
What does personal time for you look like?
Um, I read a bit, but not too many books actually. I think anything that on the internet that I find, a certain podcast, a certain, if I start going down how Brian Chesky thinks and whatever, then I'll go down that rabbit hole and review everything that he said or done, for a certain time. So
And when you do this, do you do some kind of note taking or collation, or is just absorbing?
It's just mental. It's just absorbing information. It just, I have learned that there are some things that don't make sense at that point, but somewhere just the dots connect over a period of time. And to me, it's just interesting content. I'd rather watch that or read that than maybe a show or whatever it is. Apart from that, I do like watching some shows. So Netflix
What's your current favorite?
I think last I finished watching was Succession. I think after that I really haven't picked up anything, and I like driving down on the weekend somewhere.
What do weekends look like for you?
Weekends is we have, I don't go to office on Saturdays, but Saturdays usually still has something to coordinate or some calls. So maybe 2-3 hours a day I'm working intermittently on a typical Saturday, unless I've chosen to take time off from home. Usually it's dinner with family or a night with friends, one of the two. My parents live next door, so either I'll have a meal with them or I'll go out. It's just I just vegetate. Like I don't do much. Watch something, spend time with family, or go out for a drink with the friends. Yeah.
Is there anything that you've geeked out on in the last 6 months, 12 months? Completely unrelated to work.
No, not 6-8 months. I don't remember geeking out on something. No, not really.
Okay. My
Yeah.
last question to you.
Yeah.
If there could be a word to describe you, what would that be?
Dogged is the word.
All right.
Yeah.
On
Yeah.
that note,
Yeah.
thank you so much,
Thanks
Varun,
so
for your
much.
time.
Thanks so much.